Good morning and welcome back to Morning Markets from True Potential. We'll start with stock market returns from yesterday and overnight. Here in the UK, the FTSE 100 was up 0.9% and the FTSE 250 up 1%. In the US, stock market returns were stronger, S&P 500 up 1.7%, as was the Nasdaq, and European equities were also up 1.7%. Overnight, we saw strong returns from Japanese equities up 1.8%. So an excellent day for stock markets yesterday with good positive returns from the major stock indices. UK equities were up 1% with the FTSE 100 near its highest level since February last year as investors' fears around higher energy prices and inflation eased. Mining companies were the best performers as metal prices continue to rise. Copper up 2.5% yesterday and now back at its July level, while the price of aluminium is back to a 2008 level. US equities were also higher. The S&P 500 posted the biggest gain since March, now just 2% off its record level, which was set in September. Growth stocks such as technology and communication sectors were the outperformer again. Investors appear to believe the recent pullbacks which we've seen in stock markets have been overdone, which have reignited the buy the dip mantra and given the better valuation dynamics. As we highlighted earlier this week, Q3 earnings season kicked off with the banks reporting first. Yesterday we saw a flurry of banks reporting. Bank of America and Citigroup posted quarterly earnings that beat analyst estimates as both US companies reduced the amount of cash put aside for bad loans in a sign of growing confidence in borrowers' ability to repay. Their investment banking divisions also boosted profits with successful trading activity and a pickup in the number of merger and acquisitions. In terms of economic data, we had more inflation data out from the US. Yesterday we had the producer price inflation, which is a measure of inflation based on input costs to producers. Important because the higher the input costs manufacturers face, the more likely they are to pass those costs on to consumers. Over the month, prices increased by 0.5%, which is down from the previous month of 0.7%. Interestingly, if you exclude the more volatile components, energy and food prices, it came in at 0.2% over the month, which is much lower than expected and perhaps a sign that those higher price pressures may be starting to ease. We also had the US initial jobless claims, which highlights how many people are claiming unemployment benefits. A data point that we closely monitor as it gives us an indication of how healthy the US labour market is and how the US economy recovery is transitioning. As we can see from the chart, as the coronavirus pandemic took hold last year, 6 million people were claiming unemployment benefits in a week. The latest reading came in at 293,000, which shows that we're nearly back at pre-pandemic levels of 200,000. Another important sign that the US labour market is getting back to normal. In terms of bond markets, it was a relatively quiet day, different to what we've seen earlier on this week. So in terms of the UK, the 10-year government bond yield was flat over the day, which was a similar trend to what we saw in the US bond markets. In commodities, saw a little bit more strength in gold, up 0.2%, and a bit more strength in oil as well. That oil Brent crude was up 0.6%, trading at $83.7 per barrel. In terms of currency markets, we saw a bit more strength again in sterling, trading at 137 against the dollar and 118 against the euro. In terms of economic data we'll be watching out for today, we'll get US consumer sentiment, retail sales and trade data as well. We'll also get more earnings coming from US but also UK financial companies. That's all for today. Have a great weekend and we'll see you next week.
Subscribing to the True Potential YouTube channel is quick and easy. Simply go to the channel on your desktop or through the YouTube app on your phone and click the subscribe button. You can then press the notification bell symbol if you wish to be notified as and when new videos are released. Doing this is a great way to keep yourself updated with market developments and personal finance insights. Thank you to everyone who has subscribed, and we look forward to continuing to help you do more with your money.